Good morning. How are you? Good? Okay. What are the opportunities of issuing digital assets for financial markets use cases and the challenges? Is this hype or here to stay? Are we talking about revolutionizing financial markets? My name is Nicolay. I'm passionate about education and finance. I do not know exactly in which order. I lecture in 3 universities in Brussels and in Paris, at Solvay Brussels Schools, at Paris Dauphine and at Conservatoire National des Arts et Métiers. And I'm also a private investor in fintech. I'm doing that for the last 5 years, and before that, I had a more traditional career in traditional finance, but a lot of interest of DeFi. It's my pleasure today to steer an exceptional panel with distinguished practitioners such as Thomas Jeulin from Flowdesk, Viktor Busson of Taurus, Kasper Luyckx of Crypto Finance Group, and Banh of DekaBank Deutsche Girozentrale in Frankfurt. So please allow me to introduce briefly the panelists first, but of course you can qualify all what I will say about you when you will have your turn to speak. So Thomas, to my left, Thomas Jeulin, is head of sales at Flowdesk, headquartered in France. Flowdesk was founded in 2020, and you've developed a trading infrastructure integrating centralized and decentralized exchanges, right? You focus on providing market-making solutions and trading technologies for the cryptocurrency markets, as well as liquidity infrastructures for the exchanges and digital asset projects. Yeah. Okay? Before joining Flowdesk, you were a director DCM derivatives. Do you know what DCM is? Okay, they know TradFi, huh? Okay, a debt capital market relating to rates and FX at UBS Investment Bank, and you are also a graduate of Neoma Business School in France. Now, Viktor Busson, you are Chief Marketing Officer at Taurus Group, headquartered in Switzerland. It was founded in 2018, and you've developed an advanced and complete digital asset platform which goes way beyond cryptocurrency custody. This is what your value proposition. You empower financial institutions to issue and manage tokenized securities and digital currencies. And you have announced this week a raise of $65 million, led by Credit Suisse, with participation from Deutsche Bank, Pictet, and other shareholders. Warm congratulations for this in the current environment, Viktor. And before joining Taurus, you were brand director at Procter & Gamble.
Absolutely.
I feel fascinating the conversions between traditional finance, decentralized finance, and marketing. Don't you think so?
It is. I can comment further later.
Okay. Kasper Luyckx, you are head of product at Crypto Finance AG, headquartered in Switzerland, founded in 2017. The Crypto Finance Group is part of Deutsche Börse Group now, and offers professional digital asset solutions. It's also fascinating how financial infrastructures group partner now with fintech in order to develop the system. And in your group, this includes one of the first FINMA, so it's the Swiss regulator, approved securities firms with brokerage services, custody infrastructures and tokenization solutions for financial institutions, as well as the first approved manager for collective assets for crypto assets. And before joining crypto finance, guess what? Kasper was in charge of digital asset at UBS and the management consultant at IBM. Last but not least, Viktor Banh. You are busy with digital assets markets at DekaBank Deutsche Girozentrale in Germany. DekaBank is the Wertpapierhaus of the German savings banks, and you've been finding innovative solutions for your clients for over a century, including SWIAT, who stands for Secure Worldwide Interbank Asset Transfer. We'll talk more about it. It's a joint venture between Standard Chartered and between your group as well, and you provide various services relating to tokenization. And you joined 14 years ago, and with a lot of continuity for your business. So, after this introduction, maybe it's good for the audience also to define the scope. If I might ask you, Thomas Jeulin, we are talking about issuing digital assets for financial markets use cases. Which digital assets are we talking about, please?
Sure, happy to share some thoughts. The first point I would mention is probably, it may seem obvious, but we are not just talking about only cryptocurrencies. There's a wide range of assets with a common basis that they are represented on the blockchain. Apologies. And on a distributed ledger technology. So I think that's the common ground for any of these assets. The way I would look at it, the way I tend to think about it is you've got two types of assets in my mind. You've got native digital assets that are exclusive to the blockchain. And non-native ones, and I'm sure we'll talk about it. But I'm thinking about securities or assets representing, tangible assets, real estate. You name it. There are plenty. What I would add probably is in the space that we currently know, in the cryptocurrency space. Most of the assets you will be dealing with are utility tokens. So I'm sure we'll talk about it during this panel as well. Most of these assets being utility tokens, meaning that they grant you the utility of a blockchain, of a service, in opposition to security tokens that grant you the ownership of something. In the space that we are dealing with at the moment, and the clients I'm dealing with, most of them are still looking mainly at utility tokens, and it's the case also for exchanges, market makers as well, that will be asking for legal opinion. But I'm sure we'll come back to this point later.
Excellent, thank you very much. Viktor Busson, would you like to add something, and specifically relating to your business? What are the digital assets you are focusing on?
No, absolutely. So the way we look at the space regarding digital assets, there are three pillars: either cryptocurrencies, tokenized assets, and digital currencies. So cryptocurrencies, everyone knows it. Tokenized assets, the big thesis here is about digitizing private assets, whether equity, debt, structured products, real estate. And then digital currencies is more CBDCs and stablecoin. So here, I think for the sake of the conversation, the focus will be more on ledger-based securities. So you have legal, it's actually, for instance, in Switzerland, it's actually written in the law that ledger-based securities are recognized, which is actually simply a token that will be actually the share or representing really securities on the blockchain. To make it as short as possible for this.
Very good, because before we come back to you, Viktor Busson, and I'm saying Viktor Busson because we have Viktor Banh as well, so that you know, relating to the benefits, maybe Kasper, relating to the taxonomy and so on, you have your views as well, so please go ahead.
I think you covered taxonomy quite well. It was quite inclusive.
Okay, let's come back then to Viktor Busson. What are the benefits? Some say the perks, but maybe let's talk about benefits of digital assets, and for which main use cases in financial markets. And please, possibly with real life examples. And it will be a question for all of you because you have a complementary experience, which is great. But I suggest we start with you, Viktor.
Absolutely. So today we completed more than 15 tokenization deals in real production. 15. And in terms of coverage, so I will combine benefit, use case, and the benefit to make it as clear as possible. So example number one will be tokenization of equity. Okay, so for instance, you actually issue shares that will be after custody by a regulated entity. So when you do that, for instance, it could be in a view of a private placement, for to optimize capital allocation. So you can do, in simple words, simplified and digital fundraising that will be really fully legally, in full compliance with the law, at least in Switzerland. I can comment later. Here we did it, for instance, with Credit Suisse. So basically, they integrated our platform, Taurus platform, with Taurus Capital being the tokenization platform, and then Taurus Protect being the custody. So you issue the token, and then it's more tokenization is actually more than a smart contract deployment. You need to issue, so basically you deploy the smart contract, then you call the mint function, so boom, you create the asset, but then you need to land into a wallet, okay? And usually when it lands into a wallet, again, there will be important component to take into account for a bank, such as the integration with the core banking system, okay? So for instance, Credit Suisse has tokenized private companies, which was Alaya, okay, in view of a private placement. Then we did the same for tokenizing funds. So in English, it's UCITS funds. I think in Spanish, it's OICBM. And here, the full intent is to actually cut costs on the fund administration, as well as later on reduce settlement time. And obviously, there is an obvious benefit we will talk later on, which will be liquidity. Okay, when you tokenize, at least at the end, you want to do liquidity. You want to look for liquidity. Third example will be structured products. So we issued structured products, for instance, for Pictet, Vontobel, and Credit Suisse again. And here, the full intent is to focus on the shortening the settlement time. So for financial instrument at T+0. And two, it was also reducing the cost of post-trade settlement. So you have other examples, but concretely, the full intent, and then I will hand it over to...
all right, so cutting costs, basically also providing increased liquidity and maybe access also, thanks to tokens, to different investors in the future, possibly, in terms of benefits. Otherwise, what I hear from you, it is just traditional finance translated into tokens, but which is great if there are benefits, of course. Maybe Thomas Jeulin, complementary issues relating to that?
Yeah, one of the points I picked up from you, Viktor, is about funding and debt capital markets. Just think about what DeFi brings to the table here. You have the opportunity to now widen the market access to a number of people that didn't have access to these markets. And I'm thinking of either retail users or think about SMEs. Lots of SMEs don't have access to international markets at the moment to fund themselves. With DeFi, you now have this access. And as you mentioned, you apply the mechanisms from traditional finance, but you're going to add to it being counterparty agnostic, a reduction in the counterparty risk, a reduction in the settlement risk, a reduction in the fees that you mentioned. So I think, it's probably the main points I would mention.
All right, thank you very much. Kasper and Viktor Banh, maybe a couple of words in addition to that relating to the benefits, if you think it's appropriate. Otherwise, we might want to shift to challenges, of course. Please.
Yeah, maybe I want to quickly touch on the disruption on the custody chain.
Yes, please.
So if you look at traditional securities today, how they're custodied, if you hold, for instance, a share in your bank account, typically, the bank doesn't really do custody of that share. The bank will use another custodian, maybe a global custodian, or a correspondent bank, or another bank that sits in between. And there might be a multitude of banks actually in between that are sub-custodians of each other. And ultimately, that share will sit in a central securities depository, which typically we have one for each specific country. So Spain has one, Belgium has one, the UK has one, and so on and so on. Now, if I have that share in my bank account and I would like to move that share because I'm changing banks to another bank, what needs to happen is that entire custody chain needs to be made aware that I want to transfer that share, and then actually that share transfers at the CSD level where it now belongs not anymore to UBS, but to a client of JP Morgan Chase, for instance. And that's a very cumbersome process, which takes quite a long time, and the same happens whenever we trade assets. And if you look at what happens with Bitcoin is whoever owns the private key owns the asset. And so if you start issuing securities as tokens on a blockchain, you can be your own custodian. And so I worked, for instance, in investment bank where we issued structured products directly to distributors, for instance, out of Switzerland to Canada, and we can just transfer those assets directly over the network. All they need is, for instance, an Ethereum wallet, and they can be the direct custodian of the assets. So we don't need to rely on that intermediary chain anymore. We don't have to go to the CSD. We don't have to ask them to issue the asset. We don't have to ask them to transfer the asset. We can just do that bilaterally, peer-to-peer. And the more assets you have on such a network, the more benefits you get, because it's a little bit the same as with social networks. The more users you have on a network, the more interaction points you have, and then you get exponential value out of that. And so if we have large networks where we have these assets represented and there's a large amount of those assets, we can transfer those directly peer-to-peer all across the globe. Plus, if we also have cash on those networks, then those assets can start to move cash around as well. And that's where I think you will see really the fundamental disruption coming into the security space. All the intermediaries that are charging fees for basically doing a handover or something like that, those will disappear. And that will have a fundamental impact on capital markets and on the whole security structure as we see it today.
Okay, thank you very much, Kasper, for explaining very well the issues relating to custody and to the lots of intermediaries that exist once you want to buy your securities. It goes back to the benefits stated by Viktor, decreasing cost because less intermediaries. But then brainstorming or hearing you, I'm also saying to myself, well, maybe a potential benefit is also the decrease of risk then. The risk involved in the chain with all the intermediaries, including counterparty risk. But then you might have other risks if you are your own custodian. But that well. Now, if we switch to the challenges, Viktor, Banh, with your experience in Germany, with the environment of the savings bank, when talking about digital assets, tokenization, so on, what are the main challenges, starting maybe with tech, and confidence and the maturity of technology, if I may?
Yes, I will add some points to the points, because in Germany we are happy that we have the Electronic Security Act, right? So this is why you don't need a CSD, but you need somebody who has the crypto register license. So this is like in Germany we're very happy that it starts with that, and then the DLT pilot regime really comes close to that too. They give, with their 3 points like settlement system, they give somebody else the chance to be a CSDR. So we're going on that point. But one thing is, because we are always talking about tokenization, is that the traditional assets world is very big, right? So one point is already mentioned, so you have to put it on chain to get the efficiency. And with the law, you can put also digital assets on it. So it should be a mix, because otherwise you need somebody who weighs liquidity. And so if you got a chain, this is like the SWIDE approach also, where you can mix different asset classes on it. You get volume on it, right? And also we with our partners, so normally sometimes when a new fintech is coming, it needs a business cases, right? And we are, like you mentioned, like 3 strong partners, like LBBW, Standard Chartered, and us. So we are also always working on the business side, also for the use cases, to collaborate to get volume on the chain. So this is, I think, one point. And the technical standpoint, as you asked me, so scalability is one point. So on the first time, I would say in my words, normally the financial markets all build his own systems, right? And for me, it's the first time that it seems that the financial markets agrees to a standard DLT blockchain. I wouldn't say which chain should it be, but it's always, I would say, the first time the market accepts a standard in every bank and looking into the technology activity. So this is a chance to get a standard over this technology.
All right, so in terms of scalability seems to you to be the main challenge. Kasper, would you agree, qualify?
I maybe want to slightly challenge that, because I think banks also agree to use SQL. Blockchain is a technology. I think where you get the benefit is if there is a shared protocol that everyone uses and everyone talks the same language, and then you can start interacting with each other a little bit like the internet does today. And if you don't have standardization, if you don't have shared protocols, if the networks are not open, if they're closed gardens, if everyone has their own little network, you don't really get that much benefit compared to the traditional space. And if you are operating a bank, and you have all your traditional networks you connect to, and now all of a sudden you need to connect to 15 different new networks because everyone has their own little private network with their specific use case. From the bank perspective, now all of a sudden your network cost doubles, and even though you might get a little bit of benefit on the new networks because your cost goes through the roof and you can't switch off the old networks, you don't really get the benefits. Another example of a challenge is I was working with the direct investments group of a bank, and what that group does is it raises capital for companies all over the world, like a private equity use case or private debt use case, and it places that capital directly with investors that are connected to the bank. And we wanted to tokenize that capital for the banks, because today a lot of that capital still gets issued in the form of paper-based shares, which investors hold. They're not visible to the bank. They don't count to assets under management. You can't do lending against it, and so on. But one of the challenges is that you raise capital for companies all over the world. There might be a good company in Switzerland. There might be a good company in Spain. There might be a good company in Tel Aviv. And every time you want to issue equity, you have to look at the local regulation, and you have to check, how can I tokenize equity in Tel Aviv? How can I tokenize equity in Spain? And it's very different depending on where you are. And it makes it extremely difficult to roll that out if you're working in international space, and then have kind of an overview or similarities between the different equities that you want to issue, if the law even permits it, which might not be the case depending on where you're trying to do it.
Thank you very much. Kasper, here you talked about tech, then you switched to regulation, which is great, because in terms of challenges, it can really be an issue. But then maybe to go deeper, when you look at the regulation landscape right now, what's the key hurdle, when you talk to clients, hesitating, because they say in terms of tech, it might be a challenge, as we all understand. And in terms of regulation, what do they say? What's the key issue or the key hinder related to regulation right now, in your experience?
I mean, it's a bit like I mentioned, there are different countries are at different speeds. Like we in Switzerland are a bit lucky that the Swiss regulator moved relatively quickly, and there we were able to play around very early on. If you look at the EU pilot regime, I think it's a good step in the right direction, but we're not fully there yet. There's still quite a bit of restrictions, and we'll have to see at the end of this grace period what happens with this regulation. If you look at the US, it's still quite difficult, also in Asia. So we're not quite there yet. I think this is a very slow-moving market, which is developing very slowly. And unless we have like some good standards that can apply into multiple jurisdictions, we won't see kind of the exponential benefits that everyone wants to see out of this kind of big change that we have to bring onto the financial industry.
Okay.
Yeah.
No, that's very clear. I see you are all nodding, me as well. So I think it's time now to move to a very important element that we touched already. In terms of opportunities and of challenges, you can talk about tech, regulation, but at the end of the day, for financial institutions, there must be a business case, a business model. So maybe Viktor, Busson, in your experience also, you have elaborated about a lot of benefits and perks. What about the challenge of the business case? And maybe the depth of the market, I don't know.
I think here there will be two ways to see it. First angle is when you learn to walk, actually to be a simple analogy, when you learn to walk, you do a proof of concept, okay? So you do a tokenization case. Honestly, in terms of profitability, I would challenge anyone to tell us for first proof of concept, for the learning curve, to do tokenization, to make tokenization profitable. The profitability comes with a scale, okay, over time, once you industrialize it.
Okay.
And what's important is that when you actually pick a provider as an issuer or as a bank, or when you choose your technology provider, but when you will start doing your first proof of concept of tokenization on whatever the blockchain is, on whatever the smart contract is, you actually need really to pay attention to security. So basically, once you do it once, will you be able to do it 10 times at scale to put in place all the cost efficiency, all the network effect that goes with it? And so first, you need to really pay attention to the security. Second, you need to pay attention to the governance, for instance, about all the approval workflow. For instance, if the digital asset is issued by the ECM or DCM desk, as we were mentioning earlier, the asset servicing will be managed by another team. So you need tokenization and custody integrated. You need to take into account the integration within core banking system also, which is quite a complicated element. You need to be regulated. So you have many, many things to pay attention to, and basically the business model will become profitable only when you scale, and I think this is really an important angle. And then the second angle is more depth and liquidity, obviously, but that goes more when actually you learn to walk, and then you can run. And we are building the market, obviously, and with the regulation, with the standardization that was mentioned, obviously it will come. And I think everyone here will agree.
Okay, very good. So we've covered the main opportunities, the main challenges. Maybe now, for the sake of time has come to look at the future and at the main players in financial markets. According to you, relating to tokenization and success in financial markets tomorrow, who will be the winners?
I think there will be a lot of businesses that will have to unlearn things they're doing today and learn new things and have a look at their business model and see what their main revenue streams are and see whether those revenue streams will still be there in the future. We talked about intermediaries that charge costs for basically handing something over or being in the center of something and being orchestrating something. I think a lot of those business models will disappear because the cost of transaction will basically go close to zero, will become instantaneous, will become very cheap, and you won't need somebody in the middle to orchestrate that anymore. So I think there you will see a lot of disruption, and some of these companies will have to rethink how can they stay relevant in the future. If you look, for instance, at a bank, I think a bank will remain relevant in the future because they bring trust in financial markets. They have been custodian of assets for a very long time. They do that in a very good way. And most people who hold their assets in a bank, they don't worry about whether their assets will still be there tomorrow. And banks have played a very good role in that sense for a very long time. And I think that role is still very valuable. If you can do self-custody, of course, but then you're kind of the risk is with yourself, and not everyone wants to do that. And I'm sure there will be better technology solutions in the future, but I do still think that custodians will still play a role in the future. But if banks are charging a lot of fees for FX, for instance, and that's kind of a big income driver for them, I think things like that will become really under pressure, and they will have to open up their platforms a lot more to connect to kind of services that are outside. If you look at some of the DeFi wallets, like if you look at, for instance, at what Coinbase is doing with their Coinbase wallet, they allow you to connect directly to Uniswap or to Aave, so for trading, for lending, etc. Even though it disrupts kind of the main offering of the centralized exchange, they understood that they will have to open up their platform and connect to the services that clients want to use. but they still want to be the central point by being the wallet of the client and by kind of curating, by providing advice, by telling the clients, look, these are the best services to use, and by connecting them directly from the wallet to those services, but they will have to open up their platform. And if you look at banks today, their platforms are very closed. They build a lot of the services themselves, and they don't really have an open platform, which is something that will have to change.
All right, I see all of you are nodding, but you are talking about change and evolution or revolution. Maybe Viktor, Banh, how are you positioning your group, your financial group, to cope with this evolution? And then Viktor, Busson, and Thomas, you can react also. We have 4 minutes left, but let's do the best we can.
So as you see, we are taking this topic seriously, and I think I can agree to most of your points. I think the doorkeeper or something, a safe person, should be the bank as functions. And yeah, the business model will change, but you have to look at when the bank is also a risk taker, taking credit risk and helping something. So yeah, I think DLT is something to stay.
Okay, and if I may, Viktor, Busson, and Thomas, if you can make the switch to the talents as well. The talents you need in the market in order to help your client evolve in this kind of revolution, please.
I think I will bundle the talent with the previous point, which is like the winners, because actually it goes together, and there is no winner without talents. Here the focus is about the space from a technology provider, which is really our angle. The space is moving super fast. Before it was all about layer 1, after it's all about layer 2, now it will be all about the ZK, and tomorrow it will be something else, after it will be privacy transactions. So you need to master the tech stack to adapt, because you don't know which blockchain is going to be people are going to use. You don't know which smart contract for which financial instrument will have to be used. And to do that, actually, the focus is really on developers. So that's basically the focus. And what we look for is really eagerness to learn and to adapt. Again, you see this space 6 months is like 5 years. In another financial markets. So it will be eagerness to learn, obviously hardworking and positivity. So that will be, again, you will have always technical challenges popping up and ability to really adapt. So, and we really insist on this mastering the technology to really ensure that you give choice ultimately to the client, because you don't want the client to be locked on a protocol while all the rest of the world basically has moved.
Thomas, please.
Thank you. Yeah, maybe two quick points that we discussed already. But first point is I'd say the winners will be, and the talents will be the compliant firms. I think you want to apply what you know from TradFi and replicate it to the space. I really think that you want compliant firms to really be the bridge to the TradFi space to enable from more adoption and more users. The second point, it's in line with what Viktor mentioned, about talents. It's about agility, innovations, and links back to the firms that will emerge stronger. To me, it's about tech. And I think Kasper, you mentioned it, but it's about today connectivity. There is still and we see it on a daily basis at Flowdesk, but there is a very large fragmentation in liquidity in exchanges to trade on, whether it's centralized or decentralized, in blockchains. So you need to be able to build the right connectivities, and for that you need to be able to adapt, as you mentioned, Viktor.
Maybe if I can add one more point.
Yes, last word relating to talent development, please. Kasper and Viktor.
What's really important is, as everything is becoming more and more digital, assets are going digital, everything is moving onto a blockchain, etc., all the stuff we talked about today. It's really important to have at least some understanding of the tech and to really understand how things work, but also really to try it out. I've seen so many bankers who take expensive courses that teach you about DeFi, while you can just get a wallet, connect to DeFi, and try it out yourself. And I think that's so important, because you learn while doing, you interact with the technology, you see where it adds value and where it doesn't, And then when you're defining use cases within your organization, you don't just copy what you did before, like with a new technology, but you really look to apply the technology in a way that it kind of really makes a difference. And we see a lot of that in the financial industry, where they're just copying the old into a new jacket, but it doesn't really add that much value. And I think if you really understand the technology and you play around with it, it will become easier to spot these opportunities.
Thank you very much, Thomas, Viktor, Kasper, and Thomas, for your insight. I claim a big applause for our panelists, and we thank you very much, you, the audience, as well, for being there and being interested.